fundsupermart.com.
What is your outlook on the global economy going forward?
So overall, we think that global growth is going to continue to improve, but likely to stay below trend. Now, we think the greatest focal point over the coming months will really be the dispersion between what is happening with the central banks. So you have the US and the United Kingdom that are now moving away from quantitative easing and moving towards raising interest rates. On the other side, you have Europe as well as Japan that are still very much in easy money mode. So we think this dispersion in policies, coupled then with the high asset valuations, could potentially lead to greater volatility in the markets over the next few months.
With the Fed tapering ending, how will this affect both equities and bonds?
So the latest minutes from the Fed said that tapering and quantitative easing is likely to end in October of this year. This is something that brings to an end which has been just an extraordinary expansion of the Fed's balance sheet. Now, the actual act of tapering ending itself, we think will probably have little impact on the markets, namely because it's been pretty well telegraphed so far by the Fed, and we do think it's pretty well priced in. Now, that being said, that next move when we move towards the raise in interest rates, and if it happens steeper or perhaps faster than the market expects, that could cause a bit of an impact, we think, on both bond and stock prices.
What are other risks investors should take note of?
Yeah, so there's lots of risks clearly that investors need to be aware of, whether it's geopolitical risks, whether it is data that comes in lower than expected, whether it's the potential for a policy misstep. But the one area in particular that we think investors really need to be focused on is just the low level of volatility that we see across asset classes. Right now, it's roughly at multi-decade or in some cases close to all-time lows. And while low volatility doesn't mean that investors necessarily are going to experience a downturn in the market, what it means is that investors tend to take on greater risk. So if there is a pullback, they could be overexposed. So what we think is that investors really need to reassess the risk in their portfolio, and at the same time make sure that they're well diversified to hedge against a lot of these risks in the market.
Where do you find investment opportunities within global markets?
Yeah, 5 years on, in a bull market, it's getting harder and harder to find opportunities that we like. That being said, we do continue to prefer equities over fixed income in terms of asset classes. And then within equities itself, we think the Japanese market offers the greatest opportunity. The main reason Japanese stocks relative to other markets are still quite cheap. There's very supportive monetary policies, very supportive fiscal policies, and you have a number of companies that are starting to improve their corporate governance and also potentially raise their ROI. So for those reasons, we tend to prefer the Japanese stock market relative to other equity markets.
Are there any sectors that you are particularly bullish and bearish on?
I'd say overall we're a little bit more bullish on the cyclical sectors of the economy, areas like industrials, for example, namely because these sectors tend to benefit to that pickup in global growth. And we also think any pickup in capital expenditure spending will also benefit these companies. On the other side, we're a little bit less bullish, maybe quite bearish on areas like the consumer sectors, namely because these trade at much higher prices. And we also think the consumer, especially in the US as well as in Europe, could continue to face pressure because wages have remained so low.